When you first realize that your biggest personal and business expense, bar none, is taxes, it can come as quite a shock. Seeing so much of your hard-earned money wind up in the government's hands can feel like a shakedown. That said, focusing a relatively small amount of time and effort into strategically reducing your taxes can pay major dividends. Hi everyone, I'm Becky Easton, personal family lawyer licensed in Arizona and Colorado, and this is the podcast Family Wealth and Other Musings. I want to remind you that this is just general legal information, not specific advice tailored to your situation. So if you do have questions and you would like to speak with an attorney about them, I highly encourage you to do so. You can find a family business lawyer near you by going to familybusinesslawyer.co. That's just C-O. Or you can find a personal family lawyer like me by going to personalfamilylawyer.com. And so today I want to talk about bringing you the first in a series of how to save big money on your 2022 taxes. And this content is copyright of New Law Business Model. So there are some people out there who resist implementing creative tax strategies because they're honestly just worried about it getting them into trouble with the IRS. However, as long as you do things correctly, there's absolutely nothing illegal or risky about strategizing to pay the least amount of taxes possible. Major corporations do it every single day. On the other hand, it is illegal to evade taxes. As the late Martin Ginsburg, Georgetown law professor and husband of the recently deceased Supreme Court Justice Ruth Bader Ginsburg used to say, pigs get fat, hogs get slaughtered. In other words, you want to be smart when it comes to saving on your taxes, but not greedy. As the end of 2022 approaches, we're entering into the most critical time of the year for tax strategy, and this two-part series will outline how you can get fat without getting slaughtered. Number one, you want to prepare your foundation. To save big on your 2022 taxes, your first step should be either building or rekindling your relationship with your team of financial professionals. These are the individuals who will support you in establishing the foundation for developing and implementing your tax saving strategies. At the very least, this team should include an attorney, a bookkeeper or financial manager, and a tax advisor, either a CPA or an enrolled agent. If your bookkeeper's job is more about data entry than financial management, then you should also look for someone new and who can serve you in a more CFO type role. Or get your current staff quickly trained and up to speed, because an effective bookkeeper will be managing your books on a week-to-week basis, if not daily, depending on your business. And note there that I said week to week, not just month to month or quarter to quarter. Your bookkeeper's primary responsibilities should include daily or weekly cash flow management, monthly review of reports and categorization of expenses, and quarterly updates of your forecast and projections. Again, if your bookkeeper isn't providing these types of services for you, your business is missing an essential part of its financial foundation. Outside of your bookkeeper, your tax advisor is the person who actually files your taxes. Ideally, you should meet with your tax advisor at least twice a year, once in May or June after tax season, and once approaching year's end in October or November, which is right now. The May or June meeting is a general catch-up, mid-year review that lets your tax advisor know what you're financially on track to do for the year. Based on that information, your advisor can consider the most effective tax strategies. When you meet again in October or November, that's when you really get down to business. This is when you'll project cash flow through the end of the year and get a tax estimate using different assumptions, both with and without tax saving strategies included. If your tax advisor cannot provide this level of service and is merely a tax filer, it's time to look for a new advisor. A family business lawyer can help you with that, So reach out to one today if you need to find a creative tax advisor who's capable of handling such matters. And additionally, meet regularly with many of our clients and their team of financial professionals to ensure their financial strategies are supported with the legal implementation necessary to tie it all together and ensure it works properly. To find out if a family business lawyer might be able to support you in this way, head to familybusinesslawyer.co today. Next week on this Wednesday, and I suppose next week isn't on this Wednesday. Next week on Wednesday, we'll discuss how to develop and implement creative tax strategies that'll enable you to keep more of your money in your hands rather than the government's. And until then, reach out to a lawyer near you if you have any questions about what you can do to reduce your upcoming tax bill. So this has been another episode of Family Wealth and Other Musings, and I appreciate you listening in and joining me again today. I am your host, Becky Easton, and I will talk to you more tomorrow. Thank you.